Question is the rand on the comeback trail? Well, the local currency dipping below 14 rand to the US dollar in trading this morning and is now hovering around that 14 rand to the dollar mark. This is the rand's strongest performance, by the way, since April. It's been attributed to weak data out of the US and a slight increase in local business confidence. We also had central banks globally showing that they will cut interest rates. Well, to unpack this, we're joined by Executive Chief Economist at Alexander Forbes Investment, Isaah Mhlanga. Isaah, thanks for coming in. All right, fair enough. So the rand has gone back over that 14 rand to the dollar mark, but I mean, undoubtedly, we are seeing a positive bias to this currency. Is it clear enough to say that now we should be seeing some positive effects for consumers? And I talk about inflation, I talk about petrol prices. Is it too early to say that we could see something positive coming from the strong rand?
It's quite possible we can continue to see something positive. Remember, we had issues of trade tensions, which at last week's G20 meetings in Japan, China and the US took a decision to hold off on those trade tensions and try to come up with an agreement. That was positive for markets. But I think the bigger factor is really global central banks signaling they're going to cut rates. Out of about 19 central banks, only 2 are expected not to cut rates. Other 17 are expected to cut rates over the next year. And that is normally positive for emerging market currencies, including the South African rands. But quite fortunately, we haven't scored on goals locally as well. That has helped the local currency in terms of its strength to about 13.95. But again, local issues are still quite lingering. Our macroeconomic fundamentals are still quite weak. Today's performance could have been helped as well by the bond auction that took place. And given the expectation of interest rates going lower globally, while we continue or we remain with higher interest rate in relative terms, that interest rate differential helps South Africa in terms of rand strength. But it's unlikely to be sustained given that we still have a lot of fiscal issues.
I mean, effectively, you have investors chasing that heel that seems to be better here when those central banks globally cut rates. But let me ask you this. I mean, at this level, is this rand level good or bad for the economy? Because you would have manufacturers saying, listen, this rand is getting a bit too strong. We're manufacturing here, we're exporting, but we're not seeing the benefits. So at what level is this rand good for the economy?
I think we've had that debate in the mid-2000s when the rand was very strong, manufacturers complained. But again, if you're not producing anything to sell, it doesn't matter the price because the rand is just the price of our exports. So we have to be producing the stuff that we can sell to the rest of the world. Then in that environment, we would prefer a weaker currency. But a weaker currency also comes with a higher inflation if pass-through effects are strong. But given the demand that is almost non-existent locally, you can almost say even if we had a weaker currency, we are unlikely to get inflation that coming from a weaker currency. So we would prefer a slightly weaker currency in the presence of increased production of things that we can sell elsewhere.
Would that preference have the man we just heard a few moments ago, Edward Kieswetter, the Commissioner of SARS? He wants to collect more than 1.42 trillion rand. I mean, that's the target. So again, a multitude of factors. Does a stronger currency help the economy for him to make that target?
I think what helps him is people that are getting employed, which means they are going to collect more revenues from personal income tax. You and I and other people spending more, which means they can collect more from VAT. But as we know from first quarter numbers, growth was quite weak. Unemployment, if you look at the quarterly labor force survey, and quite a lot of people lost jobs, which means it's going to be quite difficult. Also, you look at consumer confidence. It has been quite weak, which means people are not spending on the big ticket items that would normally also attract VAT. So it's going to be difficult to see them achieving the tax collections which they have penciled in. And I would guess we have seen over the past couple of years that tax collections have underperformed expectations. And given the state of the economy, I think it's going to be the same again for the next couple of years.
Are we going to see an interest rate cut at the end of this month, very quickly?
It's not a done deal.
Yep.
I think there are merits for a cut, given that inflation is right on the middle of the target band at 4.5%, but also inflation expectation has been coming down. I think the question is a 25 basis point going to boost the economy, or you need more? Can the Reserve Bank do more than 25 basis points? So if it can't boost the economy, I think there's also a cost to the inflation expectations, which the SARB really did a lot of work to try to push them from above 6% to closer to 5%, but they still prefer them to be anchored at the midpoint. So I think it's about really trying to balance the cost to pushing inflation expectations up again relative to a cut that may not even boost economic growth. But I guess it will be a confidence-boosting cut, not necessarily a cut that is going to stimulate economic growth.
All right, Isaah, thanks very much indeed for talking to us. That was Alexander Forbes Investment Executive Chief Economist Isaah Mhlanga.